Good morning, traders. It is Thursday, the 13th of July, 2017. It's 9:01 a.m. Eastern Time, coming at you from a very cloudy and dark day here in Toronto, Canada. I'm here temporarily. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance is mixed this morning. The of the products that I watch, the futures products that I watched, the leader is only up 23 basis points, 0.23%. That's the Euro stocks up 8 points at 35.21, followed by crude oil. August crude oil is trading 45.53, which is up just 0.09%. So it's up 3 cents. It's holding steady after selling off a little bit yesterday. The laggard today is the Euro Bund, that is the German 10-year note, down 0.13% or 21 ticks. Overall, just a mixed bag. Most of the equity indices are strong except for the DAX, or stronger or better, but only by very, very little. The S&P 500 up 2.25 points this morning, trading at 2442.25. That's where we stand this morning. As far as what we've got potentially driving the market coming into this session today, we had a bunch of really key numbers out of China. China is running a huge trade surplus with for June with the U.S. and the EU. The U.S. surplus, the China surplus against the U.S. is up 19.9% year on year, or from earlier this year, and against the EU, it's 15.2% from earlier this year. Also, we have Yellen continuing its Humphrey Hawkins testimony in front of the Senate Banking Committee today, so expect a Q&A, expect some comments and some news flow on your news feed. That's going to continue. The other thing that we have to watch out for today is that the Republican senators are putting out another modification or another version of the health care bill this morning. Nobody knows how it has changed. The whole process is not exactly transparent. So we might get some surprises there. We've seen that shift the market before. As far as what we're expecting for today, in addition to those, this morning we got the usual. We got the initial claims. Initial claims came in slightly worse at 247,000 versus 245,000. Continuing claims 1.945 million versus 1.95. And then as far as what we're looking for later today, we don't have much on deck. We have the EIA natural gas storage change for July 7th week, expecting 59. That's at 10:30, and then at 2 o'clock we're looking for the monthly budget statement, expecting negative 38 billion. A stark contrast to what China was able to produce there. And then in addition to that, we have a lot of Fed speakers. Of course, right now we have ECB Speaker Costa speaking, and then Yellen, as I mentioned, kicks in at 10 o'clock Eastern for the Senate banking panel. At 11:30, we're getting Fed Speaker Evans, and at 1 o'clock we get Fed Speaker Brainard. So that's what's on deck for today. So EI natural gas at 10:30, monthly budget statement at 2. We have Yellen at 10. We have Evans at 11:30, and we have Brainard at 1 o'clock Eastern. Let's switch gears. I did not do a trader bite yesterday. I was on a radio show, and it overlapped the trader bite, so I didn't do one. But I'm going to take a minute to review what was set out for not yesterday's session, but Tuesday's session. Tuesday's session, the primary hypothesis was a push up towards 25. with a potential extended push to 27. And then the expectation was for it to fall. I was looking for the impulse to go down. And that's pretty much what was worked out, but it did get a heavy helping hand by the Trump Jr. news that pushed us, that gave us a quick flash down lower in the ES before it recovered. The secondary hypothesis was for the market to test below the prior day's range and then stall, give us a rotation up. The NFP SOC is still open, 2409.75, so there's room there. So I was looking for it to test lower and for an impulse to start pushing up, and in that case, I was looking for 2430 as the target. Here's what actually happened on Tuesday. This is Tuesday right here. Okay, this is what we're reviewing. Remember yesterday I didn't do a trader bite. Tuesday, we opened, pushed up to 24.26, expected 25, and then we got that big drop down to 24.10 and a quarter before the market recovered, came back to the SOC or the scene of the crime on that news, and finished with a high of 24.27. 25 before finishing. Now notice something. These profiles, now this one has got a lower distribution and a heavy upper distribution, lower distribution and a heavy upper distribution. This one's got a heavy upper distribution. This has got almost all upper distribution with a small tail below because the market started to pull back a little bit. But notice that the market has a skew or sees value to the upper end of the range since last Friday, since the non-farm payrolls. It just has a continuous upper skew as we push higher and higher. So this is what I was talking about yesterday on the Benzinga interview, that I just don't see the argument for being a strong seller. As far as yesterday was concerned, we had an open drive on the open. We had an open drive on the open. The low is just one tick below the open. We had good delta. So this is what an open drive looks like. The market opens, either doesn't tick down or ticks, one or two ticks down. We have a gap below us, and we're moving away from the gap. This is initiative with good delta and no rotation. That is an open drive. The open drive ran out of steam at 24.42 even. Remember, I had talked about 24.40.50 being a key area for a break, and to be cautious once it breaks through 24, like 24.40.50, even though it's a triple top. I had cautioned against selling it. It pushed to 42, point and a half, pulls back, and then we get the continuation move at 42.75, and we start to get corrective, and then we're just sideways for a lot of the session before we finally get the next leg up at 24.43.75. The NASDAQ was a big laggard yesterday. It did have its gap, but it just traded completely sideways, did not have an open drive on the open at all, and was weighing us, especially the biotechs and the techs. Were mostly sideways yesterday. So yesterday we finished with a high of 24.43.75, but we have a weak high coming into, finishing the session with a weak high. In fact, that weak high shows up even on the market profile. You can see those two dots at the top. Let me expand that a little bit. You can see those two dots at the top, showing us that that the market has a weak high at the top, double test with a lot of a relatively high number of contracts trading at the top. So what that portends is that the market is likely to continue higher and take out that 24.43.75 in the overnight session, which it did. That's the summary segment of what was expected versus what we got. But since I did not do a trader bite yesterday, we reviewed the day before, so we can keep our process intact. So this is the overnight session. Here's yesterday. There's yesterday. There's what happened overnight. This is the entire overnight or Globex session or non-pit session. I call it overnight, which is kind of a misnomer because my overnight is not the overnight of someone who's in Asia, but it is the non-pit session for the ES. The market opens and pushes towards the point of control, trades the point of control from yesterday quite a while, and then as soon as Europe opens, the market pushes higher to 2446.50 and has been hanging sideways. The volume is completely in line with what we would consider to be common or normal, 139,000 contracts. So participation is pretty decent this morning, and we have a new push to the high. Remember, the all-time high is 2451.50, I believe, um, from the 18th of June, if I recall correctly. And we still have this gap zone below us, this gap zone below us that we put in yesterday. So overall, pretty bullish on the overnight and the day session. What have we accomplished so far this week? Here's what we've done this week so far. We've traded. We opened. We opened in the gold. We went and tested all the way down to 2450, 2410.50 or so. We've gapped up, and we are back in the high volume area that has been set out for a while now, starting at 2435.50, going all the way up to 2440. We are stuck in this area right now and trading in the zone. So we've recovered. We've tested below. The other key thing you should note is from the high, we broke the one-time framing. I talked about this several times last week. We've got higher lows, higher lows, higher lows, all the way from the middle of May, and then we finally got a lower low and a lower high um, a couple weeks ago, which broke the one-time framing. And then last week was an inside week, as I had reviewed on Monday. But now this gives us a lower high to work with. But now we've broken that lower high. So the one-time framing down has also been broken to the upside. So now the intermediate term view is that is not to be heavy on the short side, not to expect continuation on the short side. I expect the market to buy the dip pretty much as we head into the all-time highs. So, and we have a lot of people coming on and writing and blogging and so on, telling us to ignore all kinds of different things that would lead us to believe that the market's getting a little heavy, toppy, not toppy, but heavy on the fundamental side. But it is likely to continue higher. So, with that being said, let's switch off of flex levels. With that being said, we still have our gap below us. Sorry, my throat is burning this morning. We still have our gap zone that we didn't test. We have a pretty tight uh, uh, value area yesterday. The volume was pretty good yesterday. This sets us up for a potential run one way or another. So we have a little bit of a keg here, a powder keg that's setting up. This morning I'm expecting an open auction. I'm expecting the market to respond down into the prior day's close, and then start to push higher with the trend here. But overall, I expect it to finish, put in a higher high, but I expect it to finish somewhere in the range. And then what we're likely to do is have 2 days of a micro composite to work with, and then that sets us up for tomorrow for a bigger move out of here, is what I believe. So open auction, test lower, and then push up, make a higher high, finish somewhere in the middle. That is hypo 1 for today. Okay, so as the market pushes lower, what does that mean? Am I trying to predict what's going to happen? I am not trying to predict what's going to happen. You cannot, I don't think I can make money predicting and just trading a prediction. The goal here is to anticipate what the market's likely to do, and then to wait for the market to decide what it wants to do. And then once it does, once it shows us its hand, we can then start to trade with confidence towards the areas that we know should not be breached for us to continue to hold a position, and for the targets we have ahead of us. Right now, 2446 is a high volume node from the template day. The template day right now is back here, right? It's the 26th of June, and we have a high volume node right there at 2446, and that's the expected target. That's a template day, basically means the last day that was auctioned in this area. So I expect it to push towards this 46 and then stall out into the close and then push back. The secondary hypothesis is an open that breaches that 43.75 week high and then starts to test lower, potentially all the way through the range. Again, I expect it to finish somewhere in the middle. I expect the profile today to be fairly balanced. That is hypo 2. Okay, hypo 3 tests lower, and then we start to look for a target of 27.75, an extended target of 23.50. Who knows what Yellen will say? Who knows what this healthcare bill will say? But you can come up with your own third, fourth, and fifth hypotheses. You have 5 hypotheses a day minimum that set out what you're likely to see, and then you can look at what the market has done in the past, the auction has done in the past, to look at what targets you have. Okay, so that's where we stand. Hopefully that was useful to you. Good luck today, and I'll catch you tomorrow. Stage 5's traders, Stage 5 members, we have our AMA. We're doing 2 interventions today, 2 traders. We'll look at their numbers and see what we can offer as far as suggestions to improve their performance. Good luck, and I'll catch you later. Take care.